Hello students, welcome to the first session of Commerce, beginning with your introduction to accounting. I will be taking you through what commerce is all about and what is accounting as such. So I'm moving to the next slide. What is commerce all about and what is the meaning of commerce? Commerce as a stream of education is that stream which can be defined as a study of trade and business activities such as exchange of goods and services from the producer to the final consumer. It helps in smooth functioning of various business activities. So whatever are the activities right from the exchange of goods and services from the initial person who has produced it to the final consumer, how these goods are reaching the final consumer and how everything is going on very smoothly. That is all about commerce. And the main subjects that you will be studying in commerce is your economics, accountancy and business studies. So I'm beginning with the first chapter of accountancy, that is Introduction to Accounting. What do you mean by the term accounting? There are many definitions which have been given in your textbook. However, one definition which you should look into it very strongly is that accounting is an art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of financial character, interpreting the results thereof. I will be just explaining you this definition as of now because just being your first session you will not be able to understand too much of the definition. So I'll begin again with the definition and I'll explain you in bits and pieces. According to American Institute of Certified Public Accountants, accounting is an art of recording, right? As you all know, whatever sessions are happening in the school, whatever classes you take, right? So you have to record everything. Without recording, a person cannot memorize everything on his own. In the same manner, whenever we talk about accounting, how much goods have been purchased, how much goods have been sold, whether they were cash transactions, whether they had been sold on cash, whether they were credit transactions, all these things we or anyone cannot memorize. So what are we supposed to do? We are supposed to record everything at one particular place, right? So in the same manner as you're recording all the classes which takes place in school, all the subjects, you are writing all the notes, making all the detailed notes. In the same way, in accounting also, you're supposed to record everything. Then we are talking about classification. As I have told you, I'll just give you an example to make you understand this thing. Classifying means putting the same information in one place. Now suppose you go to the library, right? And there are many books. If you want to take the accountancy book in the library, right? So you will be questioning the librarian as to, ma'am, where are the books of class 11th? In class 11th, there are three streams. You have your science stream, you have your commerce stream, and you have your humanities stream. Again, you would like to know where are the books of the commerce stream kept. After that, more specifically, if I move, you would like to know where are your books of accounts kept. So that means that you are classifying everything to come to one particular book, the accounts book that you required. In the same way, you do things in your class as well. When you're recording the things, you're recording everything in your rough notebook. But when I tell you classification, all the content of your maths will go in your maths notebook, all the content of your science will be going in your science notebook, right? So what are you doing? You're classifying everything. After classification of the accounting, then you move to summarizing. Summarizing, as the word itself is telling, you have to have a summary of everything. Like your report card. Your report card acts as a summary. Whatever you have been performing throughout the year, how do we get a summary about it? We will get a summary through the report card, right? So in the report card, we have the proper bifurcation that these were the marks and this is what the child has been performing. So how do we come to know about accounting? Accounting, we have to summarize everything. Very important here in terms of money. What do you mean by this particular term in terms of money? That means whatever is happening, whatever are the various events that are taking place in an organization, everything you will have to look into, that is, it is in terms of money, right? Very important. Anything which is not in terms of money, you will not be doing the recording. Suppose I say there was a strike in an organization due to which there was huge production loss in the organization. So will we record this anywhere? My answer is no. I will not record it anywhere because it is not in terms of money, right? And what are these transactions and events that we are talking about? Any happening in the organization. Suppose you have sold goods for rupees 10,000 or purchased goods for rupees 10,000, right? Whether it is a cash or a credit, right? Those things, whatever are the happening, selling of goods, purchasing of goods, all these things are termed in accounting term, you will call them transactions and events that are taking place in a business of financial character, right? Which are in parts. That means whether it is your 100 rupees sale or 10,000 rupees purchase, whatever is the amount, you'll have to record all the amount of financial character. Again, financial character means which are in terms of money. Interpreting the results thereof. What do you mean by this? Interpreting the results. The accounting information that you get, right? There are many people who want to know whether my business is running at a loss, whether it is earning profit, what is the condition of my business at the end of the year. When the year ends, your parents, by seeing your report card, they analyze, right? Your parents at the year end, when they see the report card, they are trying to analyze, right? What is the condition? Where do you require improvement? So what are they doing? They're analyzing and interpreting, as in how would the child perform or how they can improve their performance. So that means interpreting the results thereof. That means even if the organization is running, the owner of the organization wants to know whether the company is earning profit or incurring losses, right? So that they can know what amount of profit the business will earn or how much is the business at loss, what is the condition of the business, right? So that means after recording, classifying and summarizing all the events and transactions in terms of money, they have to be interpreted to the owners, right? So this is what your definition is all about. Now I'm moving to the next slide. I hope you have understood the definition of accounting. I'm moving to the next slide, which talks to us about the various attributes of accounting, right? The various attributes of accounting are recording, classifying, summarizing, analysis and interpretation, all the financial transactions and communication. All these are the attributes of accounting. What do you mean by attributes of accounting? Attributes of accounting means the characteristics of accounting or the features of accounting. Any question which is asked, the answer will be same, the attributes of accounting. Here in this particular slide, I will be explaining you the attributes one by one, right? So beginning from the attributes of accounting, first is identifying the financial transactions and events, right? As I gave you an example before this, I'm repeating my example once again, that in an organization there was a strike which took place, right? Is that a financial transaction? Certainly it is not a financial transaction. There may be many events which may happen in an organization, but till you don't give money or get money from somewhere, that will not be termed as financial transaction or financial event. So anything which comes before you, first you have to identify that whether it is a financial transaction or not. There was, for example, there was an appointment of a new director in the company. Will we record this transaction? No, we will not record this transaction. Why? Because identifying the financial transaction and event, we have to identify whether that particular event or transaction is in terms of money or not. I'm just reading this first point. It means determining what transactions to record, that is to identify the events which are to be recorded. It involves observing activities and selecting those events that are considered financial character and relate to the organization. I just mentioned you all those activities which are financial, which have a financial nature, right? Those activities you have to identify first. Moving to the next point, it talks about measuring the identified transactions. That means how much or what is the costing of that particular transaction, whether you have sold the goods for rupees 100, whether you have purchased the goods for rupees 100. All these transactions we have to measure, and there would be some measurement. How will you measure it? You will be measuring it in terms of money, right? So in this point, it means quantification of business transactions into financial terms by using monetary unit. That is what I'm mentioning. Everything should be in terms of money, in rupees, because that is the currency which is working in your country as a measuring unit. If an event cannot be quantified in monetary terms, it is not considered for recording in financial accounts. That means in case that particular event or that particular transaction is not in terms of money or not in monetary terms, we cannot record that particular transaction. That is why important items like appointment of a new managing director, signing of contractors, or changes in personnel are not shown in the books of accounts. This is why we mention that important events when a new managing director has joined the organization or when we are signing contract with anyone. Suppose I am giving an example that there was a new person who joined the organization, right? And he was very beneficial to the organization because the production rose from 10,000 to 50,000. So will I record that particular transaction because that personnel came in? No, we will not be recording that particular transaction. Because why? Because it is not in terms of money, right? Moving ahead, in the further chapters I will be explaining you more about the attributes of accounting. Thank you.